Rampite.
Hello everybody, welcome back. Let's have a look at Bitcoin. I'll try and keep it short and sweet. My voice is going. I'm feeling fine though, I'm not still ill, it's just for whatever reason the voice is going. So, we're having a bit of a pullback exactly as expected. We said yesterday that we were looking for this to push up towards the top of this area, the 45,800 area, which is where we've had trouble in the past. This entire zone is a resistant zone, so it can be rejected any point within here. And it tried to get towards the top, and also, if we look at this on the daily, that was very close to a 200 exponential, and it more or less got rejected on that. So what we're looking for now is the inevitable pullback, the one that we were talking about yesterday. So there's a few areas of significance where we'll be looking for this to take place. First of all, if you're extremely bullish, you'll be looking to pick it up more or less quite, now around 43,000. This is the center of the Bollinger Band on the 4 hourly. If you're still bullish on the 4 hourly, which, well, it'd be optimistic, you would try that there, and you might get a small reaction from that level. I think it definitely needs a bigger consolidation after this nice move. Let's face it, it's been a decent move, over a 30% move now. Let's measure that from the top to the bottom. Yeah, 32% move from bottom to the top. It's been quite good. So golden cross is in play. We'll be looking for that to be retested. That currently is bringing us up to about 41,000, more or less, give or take. And that's if it were to happen today. Every 4 hours that tick by, these moving averages get higher and higher, and so the supports also get higher and higher. Like I said it yesterday, this is turning out to be a carbon copy of the last time we came down to these levels. So we came down into this old CME gap is what this was. This is a very old CME gap, but also was used to hash out an area of support versus resistance in last year's dump. So we came down, bought into that. I bought into that as well for the 35,000. Excuse me. And yeah, we had a nice run all the way up to the top, all the way back down, picked up pretty much right on the top of that support there, and all the way back up to the top. So it is a carbon copy in its formation, basically. This time a lot more aggressive. So yeah, I'm not going to be buying any more Bitcoin even on this consolidation. The Bitcoins I've bought were way back. So I sold over here, bought back at 40,600, bought back at 35,000. That's it. I'm not going to be buying Bitcoin back at higher prices. I still have quite a lot of fiat and tether ready to go, and I'll be leaving that for altcoins. And at the moment, I don't feel like that's quite the opportunity, not the real one, not a really good opportunity anyway. Maybe somewhere a little bit down the line there can be some scalping opportunities, but for any kind of prolonged outperformance of Bitcoin, the opportunities will be far and few between, if not more or less non-existent. So, Bitcoin is effectively looking to form a higher low at this point, and that could be anywhere between 41,000 and 42. As we creep down, moving averages creep up. The moving averages will touch price action at some point soon, whether it's today, tomorrow, or a few days from now. Every day that it takes, they go higher, which means supports go higher. So I'm actually pretty optimistic about the way this is going to unfold. We avoided the short signal on the weekly, which is great. The weekly's looking really good so far. It formed a bullish engulfing candle, which again we all know is pretty good idea for that to take place. And the monthly, again, a bounce on that monthly Bollinger Band center, which is the obvious place for anyone want to try and buy the ultimate bounce. It's make or break at this level. And this is what we were saying. Closures below here obviously run the risk of a prolonged bear market. Until we do that, it's essentially it's an opportunity for those who've got the balls to buy it, and so far it's worked out quite well, to the tune of 30%. So the last few videos I've made have been talking about fundamentals and why Bitcoin's bouncing, given the problems that are taking place. I say the problems, the war, but then the economic repercussions of sanctions across all currencies. So essentially, this is a hedge against inflation at this point, and I still truly do believe that. But the longer that this continues to go up or sustain these higher levels, the better the technicals look. It can also then be traded. So we're looking at like a double whammy here. It does look like the hedge against inflation appears to be accurate, and it, on the face value, seems to be an appropriate thing to say about Bitcoin at this moment in time. But we still need to confirm some much higher levels than this to really get the bulls in every time frame. At the moment, the 4 hourly is very in favour of the bulls. Daily is also in favour of the bulls, to be honest, but the weekly is not. So the weekly is the one that's going to spark major long-term continuation, and there's no buy signals particularly of any strong significance on any of these timeframes at the moment, so we are just looking for a consolidation between 41 and 42,000. There's not much more to talk about than that. Altcoins I would leave alone. As we can see on Ethereum, we're still in a consolidation pattern. This is just an overview of an altcoin versus Bitcoin. This is Ethereum to Bitcoin. You know, you want to be in mainly a Bitcoin position, and this doesn't look like it wants to resolve itself to the up. You can't really say which way it wants to go while it's in one of these patterns, although the bias is actually a breakdown. We are about to get a death cross as well on the daily, so it does look like it is Bitcoin's time to shine. And just as I keep repeating, some people take extreme offence to this. Bitcoin dominance is a red herring. Blech. Well, I mean, it is and it isn't. I mean, it works quite well when you come to support and resistances, and that's all we're looking for. We can turn all of this nonsense off and just look at it as a matter of support and resistance. You know, we used to be able to play this quite well. In the past, we've done major alt seasons, effectively hedge back into Bitcoin, hedge back into Bitcoin, hedge back into Bitcoin, all based on previous support resistances. So, I mean, for those who get upset about the Bitcoin dominance chart, everyone's got something that upsets them that's completely irrational, and maybe Bitcoin dominance is your thing. But I wouldn't be looking to enter into any major altcoin opportunities for a prolonged period of time until we come up to at least this level. And why would that be? Well, 1, 2, 3, 4 levels of resistance. I'm not saying that this is going to come all the way back down to 40% dominance and below. I'm just saying that we'll probably catch a decent move on altcoins. That's all I'm saying. So don't get upset when you see the Bitcoin dominance chart. Remember, it's just a chart, and it plays a part of my overall strategy, to which works out pretty well. Most of the time. Not all the time, but most of the time. Otherwise I wouldn't be sitting here at 10 o'clock in my pyjamas, talking on, rather than working in McDonald's or whatever. Anyway, I'm going to leave it with you there. I hope you have a nice day, guys. I'm going to go and have some ginger tea, sort this throat out, because I've got a live stream tomorrow with all of you, and I need to be able to talk. So have a nice day and take it easy.